What's going on, everyone? Ryan Small here to bring you another episode of Markup Monday. So for me, I just like to do these videos to help us get prepared for the week so we can execute. Okay, so let's dive in. Right now, I'm looking at the dollar index, and the first thing that I'm noticing is how price rejected from 94 resistance multiple times. So looking at this, I'm on the daily time frame. Price pushed up once, twice, three, four times. Four times the market rejected, and then on this last day, the market attempted to break above and gave us a strong, like a kangaroo tail type candle with the rejection. So that lets us know that that 94 resistance price was not trying to break above that. So with that, the market dropped, broke below the 50 EMA. Price retested one more time, gave us a bearish engulfing candle that pushed price below 93 and towards 92.50. The market dropped, made a new low, pushed up, retested 93 resistance, and rejected. So once price rejected that, we knew that the market was going to roll over to the downside. So now the market is around 92.64. So even with this, I would either like to see a continuation down to the downside or a possible retracement before we head lower. Unless the market were to break back above 93 resistance, that could possibly change the overall momentum. So if the market were to push back and break above 93 resistance on this retest of the hold, it could also do something like this. So that's why we're paying attention to this key area of 93 resistance. And overall, if the market, even if it pushes up, but it fails to break above this region right here, if it fails to break above this region right here, then overall we're going to roll back over towards possibly 92 support for the dollar index. Okay, so with that, now let's look at Euro USD. Okay, for Euro USD, okay, so we're going to start off at the support. Down here, the market found support. And then with this move right here, this was the retest. Strong candle, bullish engulfing candle to push price back above 1.175. And then overall price reaches 1.19. After, on this move right here, the market understand that it breaks the previous resistance. So with that, it's letting us know that the trend is possibly changing. On this retest, where does the market head to? It pushes down to this key support region, and it also retests that 50 EMA. And with that, the market holds above that and starts to climb to the upside. So now, if we break above this resistance right here, then more than likely the market is going to head towards 1.19, if not higher. All right, and the only thing that would invalidate that is if the market were to slowly start to drop and break below the trend line, retest, and then if it holds below the trend line and below this resistance, then overall we know the market is heading back towards this overall support. All right, but overall right now I'm more so bullish unless something changes. All right, GBP USD. So we have the trend line starting from here, connected it to this point, draw it out to the future. You can clearly see the market was moving within an uptrend. As of right now, the market looks like it could be exhausted because we did just make a higher high, higher low, higher high, higher low, higher high. So now with this new higher high being formed, I would expect the market to make a higher low. So don't get me wrong, this could be the higher low before the market starts to move up. But after the market has already did multiple higher highs and higher lows, I don't like a slight retracement in this case. So if I do get something like this, I would need to see more bullish confirmation. So I would have liked to see this next bullish candle engulf this previous candle right here, or something like this next candle to close and look more bullish. So if we could get more so something to where it's showing us that the momentum is still trying to go bullish, then I would look for GU to push up towards 133, possibly 134 resistance. But if we cannot break back above this resistance, then overall the market is going to head back towards the trend line. If we break below the trend line, price is heading towards 131 131 support to 130 support region. If we break back below this trend line, that's where price would be headed. So those are the two scenarios. As of right now, like I said, I'm more bullish on the dollar, so I would be I'm more bearish on the dollar, so I would be bullish on GU as of right now. But it's still early in the week, and a lot of things can change. So I'm just giving my perspective as of right now, and then this is why I like to give both scenarios. That way, if something does happen within the market, I already talked about how you should look at if the market were to, let's say, if we were bullish on it, what happens if the market goes bearish? That way, you're not totally lost. You can still take advantage. Let me look at this on weekly one time or year. Yeah, so price is at a weird range to where it could continue, like I said, that momentum, but it may suffer some exhaustion. So we may see a slight retracement to the downside. But as of right now, like I said, my bias is bullish, so I'll just be waiting to see. All right, gold. So yeah, gold. It started consolidating, but for the most part, the market was bullish. Last week, it did this strong bearish engulfing candle that dropped like 1,000 pips within the market. The market dropped around 1860, and then ever since then, the market found support within its demand zone and started slowly pushing up. So after that, the market pushed back up above 1880, and then this most recent candle, it spiked, it retested that 1870 region, and then overall it's closing back above 1880 from the looks of it. So the candle still has about 4 hours or so until this closes, but as of right now, this is looking more so bullish. It's just the only thing that we have to be careful with something like this, because it's a lot of chop right here, is this bearish engulfing candle. We got to make sure that this was the drop. We got to make sure this ain't just a correction before the market ends up dropping again. So right now it's looking like this was the correction drop or retracement. The market found support, and it's looking like it's slowly starting to climb up. So if we close above this support and the candles start to close above this support region, more than likely we're heading towards 1900. If we break above 1900 region, then overall, the market could start pushing up another 100 to 200 pips if we clear and close above 1900. But as of right now, that 1900 with this candlestick looking like this and looking like it wants to go bullish, I would expect that 1900 to get met again. And if we close and hold above that, then like I said, the market could still go another 100 to 200 pips to the upside. All right, GBP JPY. So I had caught this out, but even this pair, just looking at it, the market gave us this bullish engulfing candle that broke through this previous resistance. Market made a highs around 143, and then now the market, all it did was push back and retest that previous breakout in that previous resistance range. So this previous resistance is where the market is retesting right now. So that's what I'm really looking to see, if this area right here can hold. And if it does on the smaller time frame, then overall, we're going to see the market end up pushing back up to the upside. But even with this move, the market could still drop lower and still be within the uptrend. So the market could still drop towards 137 and still push up because it's still within structure. You see what I'm saying? It's just when you look at it on a smaller time frame, it's looking like it's starting to find support within this region. So looking at it on 4 hour, you can clearly see that the market, this was the breakout, this was the retest, and then on the 4 hour, this retest, you see how the market perfectly comes to the 50 EMA. 1, 2, 3, 4, 5, 6, 7, 8 candles, 9 candles, all on the 50 EMA right here. So like I said, if this holds and the market consolidates and the market cannot break below this 13750, then overall, like I said, we're going to see a slight move back up to the upside. So that's what I'm going to be waiting for. And if this breaks, if the market were to break below this, then I would target 137 would be my first area where I'm looking the market to go. All right, so that's what I'm also looking for on GJ, Euro Jappy. Same thing, similar. Still on the daily time frame, the market, it looked like it was overall going bearish after we broke below 123, but then the market pushed up. It looked like it was going to retest and drop lower, but after that, the market gave us a bullish engulfing to push price above 123 and also above 124, showing that the overall momentum may shift. So now that we have this breakout like this, now this looks like all correction. in order for the market to make another move to the upside. So long term, this is how I'll be looking at Euro JAP. Be like, this move just pushed up. This is the slight like bullish wedge, and then the market is getting ready to push up to the upside. If we break above 1245, then overall the market is going to hit 125 to 125.50. All right, and right now we're also at the 50 EMA. So breaking below 123.5 would invalidate. I wouldn't even say necessarily invalidate. I would just sit on my hands and really just wait until the market gives me more confirmation that is wherever it's trying to go is an actual trend. So if it breaks below 123.5, then I would just wait until the market shows me something to where it's giving me indication if it's trying to go momentum bullish or bearish. If the market can't break below 123.5, then overall I'll be looking for buys to the upside towards those 124 to 125 ranges. All right. I also want to update on Ripple because I had caught this out and it been moving perfect ever since, man. It's crazy. So yeah, I caught this out. This was the accumulation zone, 50 EMA, just like how on some of these setups right now. The market pushed up, made a high, dropped, retraced, failed on the 50 EMA, consolidated perfectly with the higher low. But with that, ever since then, the market has been pushing up. So that was around what, 23, 24 cents, and now the market is almost at 29 cents. And I told you it's going towards 30 to 35 cents. And that's just my first target because, you know, if this really wants to start trending, you can see Ripple hit 50 cents to $1 probably next year. But as of right now, just looking at it for like, you know, intraday type trading, I'm just looking at this setup and knowing that 30 cents to 35 cents is for sure looking like it's a real good possibility to get hit, especially after this most recent breakout and the market breaking out of and breaking above this most recent support region, breaking above that 26 cent barrier. Yeah, so that 30 cents to 35 cents on Ripple looks pretty good. And honestly, this is why I'm saying I'm kind of bearish on the dollar because a lot of the pairs in the actual technicals is looking like the market wants to go bearish for the dollar and go up for EUs and go down for USD CADs and stuff like that. Speaking of USD CAD, okay, so looking at this on a daily time frame, the market was clearly bearish. We had a rejection here, multiple days, the market dropped. So from there, the market dropped, found support, pushed up again, broke below that support, and then all the market did was push back up and retest that region. And now the market is back below this overall, which was once support, now it was resistance. So now it's back below that. So overall, if the market can't break back above this region, then we're going to see the market push back down towards the support region around 130. All right, the only thing that would invalidate this is if the market broke back above 1.315. It would have to be a strong bullish closure above that. If it's just like a wick close above it, I'll still kind of just be patient. But if it's a strong candle closing above 1.315, like the market looks like it's still going to go up, then overall the selling setup is going to be invalidated for that time being because the market theoretically could still push up towards the 61.8 and still be within the selling, you know what I mean? Because overall, this is the lower high, this is the lower high. So the market could still push back up towards the 61 or 72 and still be within the bearish trend. It's just you don't want to look for sales now and then deal with all that drawdown. All right, so yeah, that's what I'm gonna be looking for to see if the market can hold below 1.315, and so I'll look for the market to hit 1.30, if not a little bit lower. All right, EuroCAD. Looking at this on a daily time frame is kind of tricky because you see that the market was moving in a downtrend, lower high, possible lower high. But I also understand that the market gave us a double bottom, failed to break below 1.535 bullish engulfing candle. From the W, the market broke above the neckline, and then now all it's doing is retesting that neckline. So overall, if the market ends up closing back above 155, then I would like to see the market push up another 50 to 100 pips to the upside. And then up here may be a better opportunity for possible sales. But as of right now, that's what it looks like. I'm not going to go too much in depth with this pair because it's a little choppy right now. But as of right now, that double bottom, bullish engulfing, the price is closing above the neckline of the double bottom. So now the next thing will just be a break and close above 155, and then I would target 50 to 100 pips to the upside if we were to get that. But yeah, if the market can't break it back above 155.5, then we may see the market roll back over towards 154.5 and 154 support too. So that's just if things don't go with the actual analysis of the uptrend, then overall, then the targets would be 154.5 and 154 if the market were to start to drop and couldn't. If it didn't show you enough bullish momentum, then overall those would be the targets to the downside. All right. Guess I could kind of look at all USDs. All this the dollar pairs look pretty similar. This one is a little bit more extended because it hasn't really gave us no retracements. So it's either going to straight break through this resistance or you're going to see a retracement back down to the downside, possibly towards 0.725 before we push back up. So AU, I really don't like how this looks right now because it's already overextended to the upside, and my bias would be more so bullish. But with this, I wouldn't like to buy it at these highs. I would have to wait for that retracement, try to get in on that, and then try to ride it to the upside after we confirm that it's just a retracement to go higher. Because just because the market retraces doesn't mean it's going to go up from here. You got to be able to see how the market is acting when the market gets down here, because just like that, the market can change and break through that. See what I'm saying? So that's why you have to be able to move on the fly, even when you have a bias to certain things. Like the market conditions can always change, especially with where we're at right now with COVID and elections just passing, Trump and this and that, like other things that's going on in the world. You know what I mean? So you just have to keep that in mind, that there's a lot of economics and a lot of things can change just like that. So you don't want to just marry a bias. You want to play it to where you just taking what the market gives you. All right, so that's pretty much it for Markup Monday. I just went over a few pairs that I have been looking at. If I see any other pairs, I'll just post them in the chat or whatever. And then if you guys have any questions, just hit me up and DM on Discord, or you could just send me a message on Instagram at Winning with Ryan. All right, so I hope this video helps, and let's have an epic trading week.